Hi, I'm Nicholas Sperling. Welcome back to my channel. Today I'm going to be talking about how I was able to buy an apartment while I was making $25,000 a year in one of the most expensive cities in the world. I decided to get my travel bug out of the way early, and in 2010 I went traveling around Europe. In 2012 I went traveling around North America. Following my travels, I decided I wanted to buy an apartment to live in. Getting an apartment when you're 23 and when you're only making $25,000 a year is not easy, no matter where you live, but particularly when you're working in Vancouver and you're trying to live as close as possible to Vancouver. I knew I couldn't afford to live in Vancouver or even really close to Vancouver, so I knew I was going to have to commute in order to make this work, but I didn't want to commute a ridiculously long distance, so I was looking for the least expensive apartments that were available within a reasonable distance from work. Basically, I went on to realtor.ca and I selected the areas around Greater Vancouver that were within my price point and basically had a very short list of options that I was able to look at. So the first steps were making sure that I had a down payment. I didn't have a very big down payment. I came back from traveling, I got into work, I spent almost no money on anything. I was eating super cheaply, I wasn't going out, I wasn't doing anything fun really, but I was able to save up pretty quickly. So I came back from traveling in September, and from that point I had $0 in my bank account, and it took me a number of months to save up the $5,000 that I needed for a down payment, and it still wasn't quite enough. I needed $6,000 actually for a down payment. So I worked out a deal with a friend who was also looking to move out of his parents' place, and we were able to live together to cut costs. And my deal with him was he was paying $400 a month in rent. That was the arrangement. But I told him that if he gave me $1,000 up front, he could stay for the first 3 months. And that was a savings to him of $200, and it gave me the extra $1,000 that I needed for my down payment. The other piece of this was making sure that I got pre-approved by the bank. So I went up to the bank, and obviously making $25,000 a year, you're probably not going to get pre-approved very easily for a mortgage. What I had to do was have a very good long relationship with my bank. They knew me very well. I've been banking with them for a long time. I had taken out as much credit as possible, whether that was credit cards and upping the limits on those credit cards or getting lines of credit, so that I could show that I was able to take out loans and also that I was prepared to give up all of that in order to get a mortgage. So it was a negotiation tool with the bank, where the bank would say, oh, we're worried about the risk around you having a lot of credit cards and lines of credit that are going to potentially put you into debt and make it so that you're not able to pay your mortgage. And my response to that would be, well, I'll get rid of my credit cards and I'll get rid of my line of credit if you give me a mortgage. That was the negotiation tactic. I also wanted to improve my credit rating, because you're not getting approved for a mortgage unless your credit rating is good if you're not making a lot of money. So to do that, I had to pay for vehicle insurance every year, and you have to pay either the lump sum for the year or you pay on a monthly basis. If you're paying on a monthly basis, I think they charged between 2.5% and 3% interest. I had credit cards that gave me between 0 and 1% interest for up to a year. So I would take out a loan on my credit cards to pay for my car insurance, and that would boost my credit rating, but it would also mean that I was actually paying less interest than if I were to have made the monthly payments to my insurance provider. And at the time I didn't have the ability to pay for the entire year in full, so it was actually saving me money as well as boosting my credit rating, which was a bonus. Then I went into the bank, I asked for the pre-approval. They were skeptical that I was going to get approved. The reason I was only making $25,000 a year was I was in school one year and I was traveling another year, so I had only worked half years or a little more than half years, and I wasn't making very much as an hourly wage. I was making between minimum wage and I believe at the time about $15 an hour, so somewhere in that range. I wasn't making a lot of money, and I'd been off work for a significant amount of time, and the way banks calculate the amount of money they're going to give you, or at least at the time, was they took your annual income for the last 2 years, added those together, divided by 2 to get the average over the 2 years, and then multiplied by 5. Basically, your mortgage would be 5 times your average annual income. Because my credit was very good, I was hoping to get a little bit more than that, and I sat down with an advisor at the bank. We ran the numbers. He entered them into the computer and he said, the bank's really going to have to consider this. It's probably going to be a while before they get back to you. He heard a little ping on his computer. Turns out I was pre-approved immediately based on my history with the bank, my good credit rating, and all of that despite the fact that I didn't make a lot of money. So then came shopping for an apartment. I was pre-approved for $140,000. There's not a lot available for $140,000 in the Lower Mainland. This was back in 2012, so there was more available, but still not very much. I put $150,000 as my maximum amount into realtor.ca, which is our local website for finding properties. And that was because I knew that I'd have the ability to negotiate a little bit. So maybe a property would be $150,000 listed, but I would be able to negotiate down to $140,000, which is what I was pre-approved for. I found that there was one street in Coquitlam that had the properties that I was looking for. It would be about a 45-minute commute from work, and that was the closest I could get to Vancouver, and outside of that one street in Coquitlam, I would have to go out to Langley, which is a much further commute, or further still. So that was the closest I was able to get, and I focused my attention on that street, and I kept looking at apartments whenever they came up. I found one apartment for $135,000. That's the one that I'm in right now. I still live here. And I was able to negotiate it down to $123,500, which is an incredible price for an apartment. You don't find that anymore. So some of the numbers that I'm giving you are dated, and you're going to have to be making more money now to live in this area. But I want you to know that you may think you can't afford a place when in reality you have the money. You may not have the money, and that's fine. I'm not trying to shame anyone for not having enough money to buy a place. But for me, it made the most sense, and I had the money because the mortgage on my place was less than $600 a month, and I had $279 in strata fees. So between all of my expenses, I was paying less than $1,000 to own my own place. I then put all of the legal expenses that were involved in securing the property on my credit cards because I no longer had any money in the bank. I'd used up my $5,000 down payment. I'd used up the $1,000 that my roommate had paid me in advance for staying in the apartment, and I put $2,000 on my credit card. So when I moved into my place, I had $0 in the bank and I had $2,000 of credit card debt. And at that point, it was just hustling to pay that off as quickly as possible because I really don't like being in a position where I am holding credit card debt. That's not a great place to be in because you're paying really high interest rates. Fortunately, I was able to pay it off fairly quickly. If I wasn't able to, my plan was to shift that credit card debt onto one of those credit card loans that are at 0% interest for a year. I had another credit card that was 1% for a year. So the plan, if I still had it to pay off at the end of that year, was to shift it onto the second credit card, which was still a fairly low interest rate. And if that still wasn't paid off by the time that second year was up, the plan was then to shift it over to my unsecured line of credit, which was somewhere between 5 and 8%, so not great, but still much better than having it on credit cards. Now, luckily it was only $2,000, so it wasn't going to take me 2 years to get that money saved up, but I at least had a game plan in case for some reason I lost my job or whatever it might be. I was going to be able to pay my bills and make sure that I wasn't getting hit with massive interest payments. I'm in the fortunate situation now where I'm looking at a second apartment, and I now have a sense of how costs have shifted. So the price range of the apartment that I bought back in 2012, that doesn't exist in my area anymore. And so if you want to buy in this area, you need to be making about double that now. You need to be making about $50,000 a year. But that price range still does exist if you're willing to commute. So if you're really intent on buying a place, it is still possible, but unfortunately you have to move further out. And the price range that I bought in, that kind of $130,000 range, you can only find now in Chilliwack. So that's where I'm looking at the moment for my second apartment. I'm hoping to find another place that is going to be relatively inexpensive that I can fix up and rent out. And that's a story for another video. but I just wanted to create this video because I know a lot of people are interested in entering the housing market. We're in what appears to be a bubble perhaps, and prices are ridiculously expensive. It's extremely expensive to both rent and to buy, but depending on the location, it can still make more sense to buy if you have the funds. And Chilliwack, as an example, would be one of those areas where you can find a place that is relatively inexpensive. You can be paying less for your mortgage and your strata fees than it would cost you to rent the same place, and you are still able to commute into Vancouver. Hopefully that'll improve with transit, but if that's your ultimate goal and you're willing to make sacrifices, you can find a place. I have always wanted to live in Vancouver. I would love not to have to commute every day, but I also love having my own space. I want to be able to make changes to my space as I would like to. I run a construction company and I wanted to have a room where I could store some of my things, and my apartment didn't have that. Because I own the place, I was able to build that room in it. Those are the kinds of options that are not available to you as a renter that are available to you as an owner. And also, now that prices have gone up, my monthly costs for my mortgage and my strata fees are far less than it would cost me to rent the same place. So in the end, it was a very good decision, and I can leverage the capital that I now have in this apartment for buying the second apartment. If it wasn't for that, I would be in a much more difficult situation when it comes to trying to find a second apartment. If you have questions, please let me know, because really I just want to let people know that there are options out there. Maybe buying an apartment isn't the best option for you. Maybe that's not what you want to do, or maybe you don't have the money for it and you're just trying to find an inexpensive place to rent. I've never rented in my life, so I have no idea what that's all about. I can't give you advice for that, but if you are looking to buy and you don't have very much money, your annual income is fairly low, there may still be the ability for you to buy a place if you're strategic about how you do it. I hope that I've covered all the topics that you might be interested in or have questions about, and if I haven't, let me know in the comments down below. If this video was helpful, please give it a like. If you want to see more content like this, please subscribe and hit the bell icon so you get notified every time I post a new video. And until next time, have a great day.
Thank you.